This is Nightly Business Report with Bill Griffith and Sue Herrera.
Rout on Wall Street. Stocks suffer a punishing pullback as investors grow concerned about the once red-hot tech sector.
Arrested development. A legend in the global automotive industry is taken into custody, slamming the brakes on the career of a once powerful executive.
Opioid lawsuit. Florida sues the nation's two largest drugstore chains, alleging they played a big role in the drug epidemic. Those stories and more tonight on Nightly Business Report for Monday, November 19th.
And we do bid you good evening, everybody, and welcome. The titans of tech are tanking. The sector that led the stock market higher for several years has suddenly been beating a fast retreat, and it's the biggest and most widely held names in that group that are leading the way lower. Add to that continued concerns about trade and housing, and you have the recipe for yet another serious sell-off on Wall Street. It happened again today. The Dow was down 395 points. It was down 500 points a couple of times. We're just above 25,000. The Nasdaq was down 3% or 219 points, and the S&P was down 45.
So let's start with Apple. The most valuable publicly traded U.S. company just narrowly avoided closing in a bear market, meaning its shares are down nearly 20% from their most recent high. Today, it was this article that pushed shares lower. The Wall Street Journal reports that Apple has cut production orders for all three new iPhone models. The uncertainty around iPhone demand sent the stock lower by almost 4%.
And it's a similar story for Facebook. That stock today fell more than 5.5% to its lowest level since February of last year. It's now down about 13% since the start of November and about 38% since its most recent peak in July. And today there were new reports of a more aggressive style by CEO Mark Zuckerberg and increased tensions between him and Chief Operating Officer Sheryl Sandberg. Julia Borston takes a look at the growing list of challenges facing Facebook.
Facebook may have avoided manipulation around the recent midterm elections, but the negative headlines mount. The latest this weekend about conflict in the company's highest ranks. Facebook faces 5 major challenges. First, blocking fake news and preventing manipulation, which has been driving everything from violence in Myanmar to attempted voter suppression. Second, the platform continues to gird against data hacks and breaches. As recently as Thursday evening, Instagram told millions of users a security flaw could have inadvertently exposed their passwords. The breach ironically tied to a download your data tool that complies with European privacy regulations. All this is potential distraction from CEO Mark Zuckerberg's third challenge, reinventing Facebook's business model away from the news feed and towards the stories format. Zuckerberg warning in the company's last earnings call that they haven't made as much money from ads in stories as they have from news feed ads.
Zuckerberg has realized that they really have to monetize and ramp up their advertising on Instagram stories as quickly as possible. And the issue is advertisements on Instagram monetize at a 30% lower ratio than news feeds.
This is happening as Facebook's user growth stalls, a fourth challenge for the company. It reported that in the third quarter, daily active user numbers in the U.S. and Canada were flat from the second quarter, while in Europe, daily users actually slipped.
What's most important for investors about Facebook is whether or not these negative headlines is putting pressure on user growth, whether or not users are fleeing the platform, and whether or not advertisers are fleeing the platform. And I spent this morning going through my data on monthly active users and daily active users. I'm not seeing people leaving the platforms en masse.
As Facebook works to hold on to users and advertisers, the threat of regulation looms, a fifth challenge for the company. There are growing calls from Congress for comprehensive privacy regulation, as well as the potential for antitrust scrutiny of Facebook and its family of apps. Last week, 4 Democratic senators asked the Department of Justice to take a closer look at Facebook's handling of data breaches and foreign manipulation. Zuckerberg and COO Sheryl Sandberg have both said they believe regulation is inevitable. The question is just what impact regulation will have on Facebook's bottom line. For Nightly Business Report, I'm Julia Borston in Los Angeles.
And while we're at it, shares of Google parent Alphabet were also dragged lower today. That stock joins other so-called FANG names in the bear market territory. It's off 20% from its July peak and has erased all of its gains for this year.
Adding to today's tech misery, a report in the Financial Times that says Chinese authorities are alleging, quote, massive evidence of antitrust violations among some of the world's largest semiconductor companies, including Samsung and Micron Tech. The report also says that China plans to deepen its investigation into these companies.
Well, heightened trade tensions between the U.S. and China added to the market unrest. An annual economic summit held over the weekend brought together Chinese President Xi Jinping and Vice President Mike Pence, who maintained a hard stance on trade.
We've taken decisive action to address our trade imbalance with China. We put tariffs on $250 billion in Chinese goods, and we could more than double that number. But we hope for better. The United States, though, will not change course until China changes its ways.
The so-called APEC summit involves 21 Asian and Pacific-based countries, and this year it ended without a joint communique for the first time in its 29-year history.
And not helping matters was a new read on home builders' sentiment, which fell to its lowest level in more than 2 years. This is the latest in a string of bad numbers from the housing sector, an industry that is critical to the broader economy. As Diana Olick reports, the culprits are painfully clear.
The home builders had been the last holdouts. Housing demand was so high that builder confidence stayed strong. Even as home sales fell, mortgage rates rose, and affordability weakened over the past several months to the worst in a decade. Now, suddenly, the builders are feeling it too.
For a few months, builders were looking at the positive demographics that were supporting housing demand and seeing if the market would digest the higher interest rates, the run-up in home prices. And what we saw this month was basically a fallback where builders are saying, okay, now housing affordability is a real issue.
Builder confidence dropped in November to the lowest reading since August of 2016. This on the heels of warnings from big builders like Lennar and KB Home that they were seeing weaker demand from buyers and were therefore lowering their sales expectations for the next year. Stocks of the builders have been weak all year as interest rates started the year higher, tariffs hit builder bottom lines, and then interest rates moved higher again this fall. The average rate on the 30-year fixed mortgage is a full percentage point higher than it was a year ago. While builders might like to lower prices to bring buyers back, that is increasingly difficult.
Because real estate development is mostly debt financed, higher interest rates also mean a higher cost of financing for the builders and land developers. So that's kind of going to be baked in the cake.
Builders are reporting weaker confidence in all facets of their business, current sales conditions, buyer traffic, and sales expectations over the next 6 months. But it's that last one as we head into winter that weakened the worst. For Nightly Business Report, I'm Diana Olick in Washington.
Let's turn to John Najarian right now to talk more about what's been happening in the market. He's the founder of the Najarian Family Office. You've been trading this market for a long time.
Yeah.
And this volatility started in early October, and it just continues now. What's this market telling you right now?
Well, the market's more nervous now, Bill, about the impact of the tariffs that Vice President Pence was talking about.
Right.
And he kind of pulled a little bit of a page from Navarro's playbook, talking very, very tough about, hey, this is a long road and it might take years. And the market really didn't want to hear that. And so that's why Boeing and in particular Caterpillar were hit on that.
Do you get the sense, though, that the turn that we've seen in the market, specifically as it relates to technology, is a longer-term turn, or is this just a blip based on the rhetoric?
I think TechSoup is going to be a shorter-term turn. To the downside, that is. I think algorithmic traders and things like that have hit things very quickly because they move faster than human beings can. And a lot of those big cap stocks have really been punished and perhaps overly punished. Facebook, we can understand why.
Right.
But there's a lot of the other stocks that you can't understand why they've been hit as hard, and yet they've been hit harder than a Facebook.
But you have to admit, I mean, the highest profile and highest multiple stocks, those that have been assigned a price relative to their earnings, they've been very hard hit this time around. Is this the market just kind of fleshing out the high price stocks here?
It's so different, Bill, than what it has been in the past. In the past, a human being would respond to a big sell-off, and a human being like me might step in there and start buying. Now, with algorithmic trading being about 90% of what happens in the stock market every day, the algorithms are set up so that The more it falls, the more they sell.
The computers that are looking for certain words in headlines, they see those and down it goes.
Yep, and the weaker it gets, the more they sell. And that's why you see something like Twilio today, which fell by, I think, 14% or something like that. I mean, when Facebook or Apple fall 3 or 4%, that's a big deal. When some of these other stocks that have had great years don't have bad news and fall 3 times faster than that, that's some of these guys acting on it.
Economic background that's pretty good.
Yeah.
And the economy overall is solid.
Right, and cloud, I mean, you saw Verizon, for instance, doing very well. In fact, it was one of the few stocks in the S&P 500 that was moving higher throughout the whole session. And that's because there's a lot of demand for their product.
John Najarian with the Najarian Family Office. Always good to see you.
Thank you, guys.
By.
It is time to take a look at some of today's upgrades and downgrades. Delta and United Airlines were given an outperform rating in new coverage at Credit Suisse. The analyst cites strong execution at the companies as well as margin expansion into next year. The price targets are $71 for Delta, $113 for United. Shares of Delta rose fractionally to $56.19. Meanwhile, United Continental shares were down a tick to $92.09. Also at Credit Suisse, JetBlue was initiated with an underperform rating in new coverage. The analyst cites a muted outlook for margins and earnings next year. The price target is $16. JetBlue shares fell more than 1.5% to $17.73.
Charles Schwab was downgraded to neutral from buy at UBS. The analyst there cited a less attractive earnings outlook and heavier regulatory burdens. Price target $51. That stock fell 2% today to $45.97. Also at UBS, TD Ameritrade was upgraded to buy from neutral. The analyst said that the investors are underappreciating the stock's capital return potential. Price target now $60, but that stock fell along with the rest of the market today to close at $52.07.
Still ahead, why CVS and Walgreens find themselves at the center of the opioid fight.
Shares of Pacific Gas and Electric fell again today after California's largest utility revealed that a second power line outage occurred on the morning of November 8th. That was the same day the deadly Camp Fire started. The utility has said that it could face liabilities that exceed its cash levels and insurance coverage if its equipment is indeed found to have caused that wildfire. PG&E says it is cooperating with the investigation, and California regulators have offered to finance financial help to keep that company out of bankruptcy. But since November 8th, that stock has just about been cut in half.
A man synonymous with the auto industry has been arrested. Nissan alleges its chairman, Carlos Ghosn, violated Japanese financial law, underreporting compensation amounts and other significant acts of misconduct. Ghosn is the chairman of not only Nissan, but also Renault and Mitsubishi. It is a dramatic fall for a leader hailed as one of the best-known figures in the global car industry. He turned things around at Renault and then Nissan, where in 2005, Carlos Ghosn became the first person to run 2 Fortune 500 global companies at the same time. In 2016, Nissan bought a 34% stake in Mitsubishi, forming a 3-way alliance, sharing technology and other resources, adding in sales by a Russian automaker overseen by Ghosn as well, and the group sold more than 10.7 million vehicles in 2017, by some counts, the most in the world. That's why today's announcement, made by the man who succeeded Ghosn as CEO at Nissan last year, was stunning. Tokyo prosecutors say the 64-year-old's salary was worth $89 million in the 5 fiscal years ending May 2015, but that it was underreported by about half. Ghosn is also accused of using company money for his own benefit. Analysts are questioning whether the alliance will crumble, but one former critic of the structure, Bob Lutz, who at different times once led each of the American Big Three automakers, Ford, Chrysler, and GM, says the success of Ghosn's alliance speaks for itself. Instead, Lutz doubts whether any one person can or even should replace him.
No CEO is immune to CEO disease. Think about it. Everywhere he goes, all three corporations, nothing but admiration, adulation, yes, boss, et cetera, over a while, they tend to believe that they're above the rules and above the law, and then they start misbehaving.
Lutz and others are quick to point out there's no proof Ghosn has done anything wrong. For now, though, dark clouds hang over his reputation and the future of one of the world's biggest automakers. Nissan's current CEO says that he will propose removing Ghosn when the board meets on Thursday.
Disney's deal with Fox takes a big step forward, and that's where we begin tonight's Market Focus. Chinese regulators gave the thumbs up to Disney's proposed acquisition of 21st Century Fox assets. The unconditional approval marks a big hurdle for the company Disney amid the ongoing trade disputes going on right now. U.S. antitrust officials approved that deal themselves in June. Disney shares were down a fraction today to $115.42. Shares of Fox rose nearly 2% to close at $48.54. Oil and gas company Cimarex is going to buy smaller rival Resolute for about $1.5 billion, including debt. That deal gives Cimarex more assets in the shale-rich Permian Basin. Cimarex shares fell nearly 1% today to $88.03. Resolute Energy shares popped more than 13% to $34.70.
After the bell, L Brands reported quarterly results that topped estimates, helped by a rise in same-store sales. The parent company of Bath & Body Works also said it named a new CEO for its Victoria's Secret brand. The company raised its earnings forecast for the year, but slashed its annual dividend to $1.20 from $2.40. Shares were volatile in after hours, but they finished the regular day down 2% to $34.55. Also after the bell, financial software firm Intuit said subscriber growth in its QuickBooks Online contributed to an overall earnings beat. The company also gave profit and sales guidance for the current quarter that was ahead of Wall Street's expectations. Shares initially rose in the after hours, but they finished the regular day down nearly 6% to $199.24.
Florida's Attorney General is adding two of the country's largest drugstore chains to an existing lawsuit against opioid distributors. The state alleges that CVS and Walgreens both had a hand in perpetuating the nation's opioid crisis. Bertha Coombs reports.
The drugstore chains bear some of the blame in the opioid crisis, says Florida Attorney General Pam Biondi. She's adding CVS and Walgreens to a lawsuit against drug companies including OxyContin maker Purdue Pharma and wholesale distributors like McKesson, charging that the drugstore chains, quote, joined the race to sell as many opioids as possible and should have known that the quantity of opioids being distributed in Florida far exceeded the medical need of residents.
What's interesting about bringing CVS and Walgreens in is that some say they're so far down the chain of responsibility when it comes to the opioid crisis. You've got doctors prescribing drugs that the FDA says are important, safe, and necessary. You've got the Purdue, the manufacturer, so many entities between the manufacturer of the opioid and CVS, and that's the argument that they're making for why they really don't belong in the suit.
Walgreens declined to comment on the litigation, but in a statement, CVS called its addition to the Florida lawsuit, quote, without merit, adding that the company is committed to, quote, the highest standards of ethics and business practices, complying with federal and state laws. Both have already been sued as part of the massive multi-district litigation in federal court in Ohio, which has brought together more than 400 state and local cases before Judge Dan Polster. So far, the court has not ruled out any of the defendants in the case, and legal analysts say that may be why Florida and others are making sure they have a claim from firms with deep pockets.
If you look at CVS's annual revenues and Walgreens' annual revenues, they're over $100 billion a year. If you look at Purdue's annual revenues, that's the main pharmaceutical manufacturer, they're only in the 30s. So if you're also thinking about who can afford to pay these settlements, you want to bring in the big guns.
Judge Polster is pushing to reach a global settlement in the cases within months. He's trying to avoid them dragging on. It took the better part of a decade to reach the $200 billion master agreement in the 1990s tobacco lawsuits. For Nightly Business Report, I'm Bertha Coombs.
Let's turn back to Abby Gluck, who you just heard from in Bertha's report. As we mentioned, she is a law professor at Yale Law School. Welcome back. Nice to have you here, Abby.
Thanks for having me.
I want to go back to something that you said in Bertha's report, that these are legal drugs, they're FDA approved, they're prescribed by physicians, and as a result of that, Walgreens and CVS are obligated to fill those prescriptions. So on what basis is this lawsuit going to go forward with them?
Well, this lawsuit is different from the tobacco lawsuit precisely because the plaintiffs are casting a hugely broad net of responsibility. They are arguing that everybody down the chain had a responsibility to raise red flags when they saw too many prescriptions. And they're arguing that these companies had sort of a public health duty, a duty to the public, to monitor and raise warning signals when they came about. That's different from the tobacco crisis, and It's what's pulled in CVS and Walgreens.
But here's the question I have. When you consider the massive settlement talks that are going on in Ohio right now involving those 400 entities, and you add in the other state lawsuits that are coming up here all the time, what you're essentially going to do is just punish the people, the entities that have been involved in perpetuating the opioid crisis, but you're not solving the opioid crisis. Do you suspect, as Judge Polster is hoping, that there will be regulations or new laws to come forward to try and do that?
Yeah, this goes to the question, can litigation solve a public health crisis? And of course, it cannot, right? Litigation can throw money at the crisis, and money is needed because there are a lot of people who need treatment. But you're not going to get a solution to this crisis until we get actual legislation that deals with proper pain management, addiction, and lifts lots of federal barriers to effective treating of addiction.
What do you think that, who's going to do that? Where's that going to come from, do you think?
Congress just tried and didn't do very much. Congress didn't do any harm, nibbled around the edges, but it didn't do enough. Every single state has actually tried to pass some legislation, and prescriptions have gone down. But for something more comprehensive, I do think the federal government is going to have to come back in.
Because will this not have a chilling effect? I mean, if a Walgreens and a CVS can get put into this massive lawsuit, everybody who touches the drugs on the way down the line is vulnerable, correct?
Well, yeah, they already have been put into the lawsuit. I mean, I think the answer to that is, yeah, who's left? Because they've already got the distributors. They've even got a hospital accreditation agency that recommended against the undertreatment of pain in the 90s. So these plaintiffs are being very aggressive. They started with tobacco, but they went far beyond the tobacco playbook to pull in as many defendants as they could.
Abby, thank you very much.
Thanks for
Abby
having
Gluck
me.
with Yale University.
Coming up, stay calm and invest on. How to take the emotion out of retirement decisions, even in a market like this. As we mentioned, big declines in some of the largest tech stocks drove today's market slide, and because they are so widely held, it no doubt leads some investors to worry about the impact on their 401ks and retirement savings. And sometimes it causes some to make major moves as a result. Sharon Epperson joins us now to talk about how retirement savers should be thinking about their portfolios amid all the volatility. And is there evidence that they've already made some big moves here as a result?
There is some evidence over the last several weeks. I mean, investors are looking at their 401k plans. They may not have individual shares of Facebook or Amazon, but they're looking at the sell-off that they're seeing, and they're saying, maybe I need to do something. And what we're seeing, according to Alight Solutions, which looks at 401k trading activity, is in a buy and hold investment like your 401k, we're seeing higher than average daily trading activity. Usually don't see much of anything, but on October 29th, we saw, as the market plunged, a nearly double-digit increase in the amount of daily trading activity in a 401k. And as the market started to rebound a week later, we saw, again, more trading activity. Investors doing kind of the opposite of what they should be doing, selling at the bottom and going into fixed income, and then buying, as the market rebounded, buying more equities.
You know, John Najarian earlier was saying some of it is the computers that are doing it, but it does sound like we're getting some knee-jerk reactions from, you know, retirees or people who are on the verge of retirement. And they're going to have some regrets, I would
Yes,
think.
we've seen it often. I mean, Legg Mason did a survey, and they looked over the summer at investors who had $50,000 or more in investable assets and said, you know, have you ever sold and then regretted it in your 401k plan? And 1 in 3 investors said they made an emotional decision to sell in their 401k plan and later regretted it. More than half of them were people who had kids in their household, and we all know we spend money on our kids and sometimes take money out of our 401k to do it. But the other thing that was interesting is nearly half of them described themselves as expert and advanced in terms of knowing about investments, but still their emotions got the best of them.
20 seconds. How do you take the emotion out of it?
Don't do the bad things. Don't overspend now or in retirement. Don't over-subsidize your adult kids, which we've talked about.
Right.
That vacation home that seems great, can you really afford it, or are you stretching? And then think about those healthcare costs, where they are now, where they may be in retirement. The market's going to be volatile, but you got to focus on what you can control now. That's the way to stay calm and keep investing.
Excellent.
Sharon Epperson, as always, thank you.
My pleasure.
Wise words.
Billionaire and former New York City Mayor Michael Bloomberg is donating $1.8 billion to his alma mater, Johns Hopkins University. It is the largest gift ever made to an education institution in the U.S. Bloomberg says the donation is to help the university provide financial aid for low and middle income students. Johns Hopkins says the move will allow it to admit qualified applicants without considering their ability to pay.
One last look at the day on Wall Street. It happened again. Another big down day, down 1.5% for the Dow. The Nasdaq fell by 3%. The S&P down 45 points.
Keep calm and invest on.
Exactly.
That does it for us tonight. I'm Sue Herrera. Thanks for joining us.
I'm Bill Griffith. Have a great evening. See you tomorrow.